welcome to episode 8 of the Life and Finances Together podcast. Today, our senior financial professional, Roger David, will be speaking with special guests Brian and Derek Boer, the Boer Insurance twins, both uniquely qualified to answer our insurance questions and address common mistakes and misconceptions about insurance coverage today. We've got a lot to share with you, so let's get started.
Well, you got to know that these guys know what they're doing, right? We've been working with Boer Insurance now. Gosh, I've got to say that it's got to be going on close to 10 years at least. And I know that your dad, Dave, knew Rob, my business partner who retired. They went to high school together, right? Was that in Northview? Did you guys go to Northview too?
No. Fort Hills Northern. Yep.
That's where my daughters went.
That's right.
So, and we know that you guys are here because you really know what you're doing. And I really have to say that because you're both MSU grads and I'm a University of Michigan grad. So you have to know that I have the utmost confidence in you guys, right? I mean, you know what you're doing. We've had personal experience with you guys that, have taken my family through some things that have happened. So it's great to have you here with us. So we wanted to just kind of get to know you guys a little bit. And we already shared a few things. Give us a little background on how you got into the business. I know you didn't jump right out of college and start working with Dad. With your dad, David, started the practice. When did he start the firm?
He actually bought it from his dad in 1998.
Oh, wow.
So, yeah.
So this has been around a long time.
A long time.
All
Yeah.
right.
Yeah.
Well, tell us your journey. Tell us about your guys' journey to get to working with your dad in the insurance business.
Well, believe it or not, we were actually nerdier than we are today. We used to be accountants, tax accountants of all things.
Man, okay.
Yeah.
All right.
So we appreciate the finance side of things. But we graduated from Fort Hills Northern and then both went on to Michigan State and got our undergraduate degrees in accounting and then pursued our master's in tax. And then for the first time in our lives, we had to separate. I went to New York, Brian went to Toronto, and both worked at Ernst & Young in the tax accounting departments there. Yep. And then moved back to Michigan in 2015 to join the family business. Our dad had owned it for quite a while at that time and was thinking about what his succession plan was going to be. And sharing a last name kind of put you first in line for that succession plan. So we didn't have to go through too many interviews to join the business and start taking it over in that respect. So.
Yeah, you know what I love, though? I know that you guys didn't just rise right to the top and were the top dogs. I know your dad well enough to say, hey, he probably made you guys do some grunt work at some point in time, when you first entered, right? So, I mean, that's one of the things that we respect and love about you guys the most, right? I mean, and it's come across in the service that you've actually given myself and my family. How long have you been doing this now? How long have you been with the company?
It's been almost 10 years.
Okay.
We also, family business. We worked in the agency in high school and throughout college as well during summer breaks and whatnot. So we've had our insurance licenses forever, but consistently for about 10 years now.
Yeah. So when you were working in college and whatever, Dad make you clean the office, do that? Was it that kind of stuff? I had to do that when I was a young kid, too.
Roger, it was worse.
It was worse?
Door-to-door insurance sales.
Oh, man.
So that'll really build some character and
that'll build some serious character, I'll tell you what.
That'll teach you how to appreciate a client, I'll tell you
right?
that much.
If you were doing it on a Saturday afternoon in the summer, it'll teach you to appreciate some air conditioning, too, right? So, I mean, well, we've appreciated everything that you've done for our clients over the years. And one of the things you guys have been masterful at is really just kind of educating clients, right? There's insurance people that are out there, they do a really good job and they're professional, but the one thing they're lacking is the education and explanation that goes along with it. So, I mean, a lot of the things we talk about are what are the mistakes that are made, right? What are the crazy things that people do? So we're going to break this down into the different areas of insurance to just talk about, hey, what are the common things that you guys have seen and how can we educate the public, our clients, even your clients to say, hey, look, don't do these things, right? So we talk about homeowners insurance. And so many things are happening around the country right now where premiums are going up like crazy, right? And there's even additional restrictions and everything. But what are some of the common mistakes that you both have seen that people can actually put themselves in financial harm's way when it comes to coverage on their home?
Yeah, and I'll let Brian share the first example of that, but I think just the context to people ending up in that scenario in a lot of instances is kind of like when, we feel like we might be sick or might be, in need of some sort of medical care, and we decide we're just going to, punt it, right?
Yeah.
It's a little bit easier not to know than to have to go through that and find out, and I think a lot of people do that with their insurance. The set it and forget it. It just, put it on auto pay and just be done, right? And I think that's what leads to some of these instances where the insurance, got so out of line that when it was time to use it, it just was not appropriate by any stretch of the imagination. So Brian has plenty of examples to use, some really good ones from a home insurance perspective. So Brian, I'll turn it over to you to share a good one with the audience.
Yeah, absolutely. I think one of them that really moves the needle, big ticket item, is understanding the coverage amount on your home, right? Because that coverage amount dictates how much is on the table to rebuild your home if you have your worst day. And that tornado rips through your neighborhood. You're up north and you get the call from your neighbor that your house is on fire. None of us are planning on that.
Right.
And thank God, most of us will never go through that. But that coverage amount makes all the difference in the world in terms of how your home is going to be rebuilt and whether you're mortgaging or liquidating investments to cover the gap to rebuild your home. One thing that often gets overlooked is additions or improvements to a home.
Right.
Many people don't think about letting their insurance agent know, hey, we just put $200,000 into the kitchen, or we just put on a $300,000 addition. And when we do an insurance checkup with our clients, we'll sometimes find that that was recently completed, never thought about making any notice of it. Well, hey, look, that home insurance policy is way understated at this point. That's
Right.
nowhere appropriate for your home as it sits today, right? So I think some confusion comes over not only the coverage amount that's on the policy, but also it's designed from a rebuilding standpoint, not from a market value.
Gosh, I would even have thought, that you bring up that point. That's incredible. I've never even thought about that. I thought, well, if you did a remodel on the kitchen, well, okay, right? Yeah, it's nicer than what it was, a few weeks ago.
Mm-hmm.
But I wouldn't think that you'd have to report that. You put an addition on, it's obvious, right? Well, to me anyway. But when you're doing a remodel, honestly, guys, I wouldn't have thought that I had to worry about that.
Yeah, and it really depends on the extent of the remodel as to whether the insurance company is going to come out and take a look or not. And if they're not, it's up to the client and the agent to determine what's the appropriate coverage revision that's needed. In some instances, you had an unfinished basement and you put $50,000 into drywall and studs and flooring, and it's fairly easy to determine how much coverage needs to be added to the policy. But in other instances, you remodeled the kitchen. You stripped out the old cabinets, the vinyl countertop, the tile floor, all the old appliances and everything. And
The
you
old
put all
square,
new.
the old square linoleum floor, right? Yeah.
Exactly.
That we all grew up with when we were
That's
younger,
right.
right?
That's right. And like Brian mentioned, the policy is designed to rebuild the home with new materials. So now you're looking at what does it take to rebuild this home with these upgraded or nicer, higher-end materials versus what was being used before, and making that determination is very, very challenging. The good news, I think, when it comes to the cost of insurance is when someone spends $200,000 to remodel their kitchen, it doesn't necessarily dictate a $200,000 increase in the coverage on the home, because $25,000 of that is going to be for demolition. $50,000 of that is going to be for regular, permits and some of the other labor costs associated with, putting in the flooring and the cabinets and everything
Right.
else, regardless of what the quality was. The remainder is probably going to be an increase in the quality of the materials that were used. So in a lot of cases, you might see maybe 40 to 50% of the cost of that improvement to the home warranting a coverage increase on the homeowner's policy.
Yeah. One of the other things, too, that we've seen is, do you have coverage for the value of the house, or do you have coverage for the replacement value of the house? What does it cost to rebuild this thing versus, hey, what's the assessed value or the appraised value of the property, right?
Yeah, absolutely. Well, we actually met with a construction company earlier this week, and the gentleman works mostly in West Michigan, and he said he doesn't think that any home, regardless of the quality of it, could be rebuilt for less than $225 per square foot.
Wow.
If you look at the purchase price for most homes in West Michigan on Zillow, you're going to see a purchase price of somewhere between $150 and $200 per square foot. Why is that the case? Well, a lot of times the roof is 20 years old, the mechanicals are 15 or 20 years old. There's some depreciation or some wear and tear on this house, right? So the purchase price of a older used house is not going to be what someone would pay for that same house brand new.
Right.
But if that home is entirely destroyed, you can't go and find a 15-year-old furnace to put in it. You can't find 40-year-old siding and a
that's true, that's
20-year-old
right.
roof to slap on that
Right.
thing. You can't Frankenstein it together with used materials. It's got to be brand new. So that home that someone might have paid $225,000 for might cost $350,000 to rebuild brand new. And so the home insurance policy should reflect that, because if it's in a pile of rubble someday, you're going to have to rebuild it brand new and pay those new construction costs.
When we stipulate what that replacement value is this something we have to look at on a regular basis, bring you guys in and do that? Or is it just enough to have that clause or that language in the contract to say, hey, I've got this covered for replacement value, not what the appraised value is or a current value?
Yeah, that's a great question. Like Brian had mentioned before, the policy is designed to rebuild the home. So when the policy is first created, the coverage should equal what it would cost to build that home brand new, regardless of whether the home is 10 or 50 or 100 years old. It should be, what does it take to build that type of home brand new today? And then most insurance companies are going to apply an inflation factor to that coverage amount at each renewal. So, 5 years ago, that inflation amount was 3 or 4%. The past 3 years, it's been anywhere between 9 and 19% because of what construction costs have done post-pandemic. So hopefully the insurance company is automatically adjusting that coverage amount, and you shouldn't necessarily need to do too much to it unless, like Brian mentioned, you're putting an addition on, making improvements to the home, doing that type of thing.
I think another big one that comes up frequently, especially when working with new clients, is regarding a trust. Right, they worked with an estate planner.
Wow, yeah.
They've got their ducks in a row. They're doing all the right things.
Right.
And they were advised to deed their home to their trust. Usually it's the family trust, right? It's Bob and Jane Smith Family Trust. Well, that wasn't such a big deal until a few years ago when there was a court case in Michigan where the courts sided with an insurance company for denying a home insurance claim, stating that the home was legally deeded to a trust, not to the individuals. And it was only the individuals shown on the insurance policy. So they said, hey, that's great that you have this big claim. Show us the insurance policy for the trust. They said, well, it's our trust, right? That's our trust and it's our home. Went to court. Court said, nope, we're with the insurance company. If the trust isn't listed on the insurance policy, coverage does not have to apply. So it's just it's a little catch-ya, check the box type of thing. Doesn't cost anything. It's just a disclosure, doesn't really change the policy, but very important that when a home is legally deeded to a trust, the trust needs to be disclosed on the home insurance policy to ensure that coverage applies.
So did that family not have coverage?
Right, that was denied.
Man.
Denied by the insurance company, upheld by the court system. That was a huge earthquake through the industry because all of a sudden, something that didn't used to matter, now it was critical. So everyone that has a home or a property deeded to a trust needed to make sure that policy was updated to reflect the trust.
And it's common, right? You're going to have your house in a trust. You better make sure you check that little box he was talking about. So one of the things, too, that you guys have brought us through was auto insurance, right? All the major changes that have been going on in Michigan, especially as it relates to liability and, hey, who's covered and who's not when you're driving with somebody else. One other thing, too, is the story that I have to tell, which is a personal endorsement of what you guys do. I mean, my daughter was in a pretty good car accident, totaled the car, and I called you guys right away and say, hey, she's all right. And we had to go through this whole process of, filing the claim and everything. And I'll tell you, one of the things I remember is that I didn't have to do a lot. You guys took care of it. That's one of the things that I value most about what you do, because even though I do what I do for a living on the financial side, I don't do what you do every day on the insurance side. But it's part of what, we try to advise clients on them. That's why we send them to you, right? Because when are we calling you guys? When something bad happens, or maybe we don't like the premium, but when something bad happens, right? I need some help. I need your expertise. This is where the rubber hits the road for the two of you. So, getting into what the auto insurance is, I just want to thank you guys for doing that, because that's a big deal, right? And that means a lot to any client that we have, right? Because they are used to the personal intention with us. Yeah. But on some of the stakes and some of the challenges we've seen over the last few years on auto insurance, what are we still doing? What are the things people should be aware of and watch out for, especially when you have young drivers, right?
Yeah. Well, you're very welcome for that. And no parent wants to ever get that phone call that their child was involved in an auto accident. And like you mentioned, thank God she was okay. But you said that, everything was taken care of. And that kind of brings me to PIP coverage here in Michigan, personal injury protection coverage. If you're hurt in an auto accident, whether you have the health insurance or not, there's going to be a lot of medical expenses that are unlikely to be covered by anything other than PIP, personal injury protection coverage. Some of those expenses are going to be things like specialized rehabilitation, in-home care if you need someone to live with you and help you go about your day. Maybe you need to be in an assisted living facility or a nursing home. maybe you're going to be paralyzed from the waist down, and you have to modify your home and your vehicle to be handicap accessible. Those types of things are very unlikely to be covered by any type of plan other than PIP on the auto insurance. So what a lot of people are doing, and I would say it's a mistake in most cases, is they'll say, well, I've got health insurance through work, so I don't need to have PIP coverage on the auto insurance. Well, the health insurance is going to do okay in the event of minor injuries from an auto accident, but if you or someone in your family, God forbid it was one of your children, was seriously injured to the point that they needed care for the rest of their life, the health insurance is never going to pay that. You're going to need the PIP coverage, and hopefully an unlimited amount of it, to care for that person for the rest of their life. So that's a huge exposure that a lot of people have that I'm not sure that they're entirely aware of, that they could entirely eliminate by choosing unlimited PIP coverage on their auto insurance, which in a lot of cases would cost just a couple $100 a year.
I think an important piece to remember with that coverage is a lot of those claims, you're not even in a vehicle when the accident happens. You're a pedestrian, you're riding your bicycle, you're in a crosswalk, you're rollerblading. A lot of those claims, the poor person who's been injured wasn't in a vehicle, but they were struck by a vehicle. That coverage applies. One of the biggest claims that we have in our office is from 20 years ago, where a kid on his bicycle was hit by a vehicle. He's still alive, but he needs a lot of care, and he's going to need care for the rest of his life. They've paid out over $13 million for that care since that accident, and they'll continue to pay that until he's either recovered or is moving on, right? So that coverage applies for your lifetime of care as long as you have the coverage on the date of the accident. So when you have kids away at college, they might not have a car, they're walking all over the place, they're biking all over the place. It's not always an accident where you are in a vehicle. You might be a pedestrian or you might be on a bicycle, but God forbid you're hit by a vehicle. That PIP coverage applies and is absolutely critical.
What are people doing where you don't have that coverage? Is it, like you said, it's a couple $100 a year, but are you seeing that people are, I'm not going to do that, I don't need to do that, it's not going to happen to me?
Yeah.
I mean, do you see that often?
You see that, I would say about 7% of our clients choose less than unlimited for that coverage, right? And it's usually maybe unwarranted advice from an uncle here or a cousin there or somebody else that tells them it's just not needed. And I hope it's not needed, right? I hope you never would need that coverage. So that's great. Put a couple $100 in your pocket and cross your fingers. But if you ever do need that coverage, only about 33% of what's paid under that personal injury protection would also be paid by health insurance coverage. So there's a huge gap between what's covered by your health insurance plan versus what gets paid under personal injury protection. A lot of people think it's one and the same, right? Why would I pay for the coverage in my auto insurance if I have health insurance or I have Medicare? Well, there's really not that much overlap. There's a lot that's paid by personal injury protection coverage that would never be paid by your health insurance plan and certainly not by Medicare.
Wow. So we'll talk a little bit about online coverage, right? Because that's very popular. They're all over the place, and it's easy to do, and they're selling, inexpensive coverage. So when somebody comes to you, and maybe they've been with another company that's an online company, they're responsible for, I would imagine, checking the box and going online and figuring out what coverage they need and what they don't. I've never gone online, so I have absolutely no idea how this works. But what are some of the common mistakes that are made for people that are trying to do it yourself?
Yeah.
Roger's never gone online, but he was placing some sports bets when we walked in here, so I don't know about that.
Yeah, it wasn't on my Wolverines, I'll tell you that.
No, you shouldn't be doing that.
Oh, man, all right.
Anyway, one of the biggest things that I see happen when somebody is, doing insurance themselves or maybe using an agent that is a little bit green to the industry is they're insuring vehicles that they don't have any financial interest in. So, grandma is insuring her granddaughter's vehicle. Granddaughter lives in Illinois or Florida, but grandma's insuring it because granddaughter doesn't have a very good credit score and maybe has a bad driving record. And as long as the policy shows that that vehicle is insured, grandma and granddaughter think that that vehicle's got coverage, right?
Right.
That's not going to be the case. There are so many rules that come into play when you're crafting an auto insurance policy that dictate who can be insured by this policy, number one, what vehicles can be insured by this policy, number two, and how can those vehicles be used, number three. 20 years ago, you could play the game about, not disclosing your 16-year-old driver and, storing a vehicle.
We've had clients do that.
Yeah, I know. Maybe you have, someone that keeps their vehicle downtown Detroit, but you say that you're keeping it in, Novi. That doesn't happen anymore. Even if you try to play those games, insurance companies have crafted the language in their auto insurance policy that they can deny a claim if you have not appropriately disclosed all the relevant information on that policy. So not disclosing your 16-year-old because you don't want to pay for them, well, they're not going to have coverage anyway. So, it's really important that people insure vehicles that they legally own, that they've got the people in their household appropriately disclosed as drivers on the policy, and that they're making sure that they update those things when it's warranted.
Right. And I think what's important to consider is the insurance policy is a two-way contract, right? It says, we will do this so long as you do that.
Yeah.
Right? So you have to comply with the terms of the insurance contract in order for that contract to be valid. And a lot of insurance policies have a duty to report clause, which simply says, hey, if these type of things happen, you have 30 days to notify us of that, right? One of those is, of course, changing of drivers in the household.
Right.
Changing of the address that vehicles are kept at. We had, thank God, not our client, but a friend of one of our clients that moved from Michigan to Colorado, totaled her truck 32 days after moving to Colorado. Filed the claim on her auto insurance policy, which was still in Michigan.
Oh.
Claim was denied, right?
Right.
Totaled truck, had some medical expenses to go with it. They said, sorry, you didn't comply with the terms of your insurance policy. Coverage is null and void.
Just simply update the information on where you're at.
Right. But people don't think to do it. I already paid for 6 months of coverage, so I'm good until the renewal date.
Right.
Hear that all the time. I'm not going to look at the auto insurance. I already paid 6 months. I already paid a year. So that policy is fine. That policy's not fine because that has terms and conditions.
So even though you might have coverage, you've got coverage, you may not be covered unless you're doing what you're supposed to be doing. Like you said, a great way to say it is it's a two-way street.
Right. You've got a piece of paper, but you don't have coverage. Right.
Yeah. I mean, and states are different. Right. So, I mean, then you get into this situation, too, where we have clients that go down to Florida for the winter. I mean, what happens with that? I'm up here. I'm a resident of Michigan. I'm down in Florida. I run somebody over. I smash a car. What happens then?
Yeah, that gets very gray. In most cases, your auto insurance should follow where your primary residence is. So if you are, filing a tax return as a resident of the state of Michigan, you're generally going to have your auto insurance here, your umbrella insurance here, et cetera, et cetera. But those policies need to make sure that they apply in other states, number one. And number two, that they've got the appropriate coverages that are going to coordinate with the laws of another state. So there's a coverage, for example, on an auto insurance policy here in Michigan. It's called property damage.
Right.
It only applies outside of the state of Michigan. That coverage will never be used within our state. But because of that, it's very, very inexpensive, but people don't recognize it, so they choose the minimum amount of it. But if you happen to take a trip down to Chicago for the weekend and you rear end a brand new Escalade and you push that into a brand new Range Rover, you might be paying a couple $100,000 out of pocket for the repairs to those vehicles because in that state, they can sue you for that damage, and you chose a very, very small coverage amount for that type of occurrence because you just didn't know about it.
So this brings up another good point is, in Michigan, even if you're not at fault, you can be sued. I mean, what do you do with that? I mean, what box do you check on that with the insurance application to say, I want that coverage, right?
Yeah, really concerning, right? And often mistaken is the fact that Michigan is a no-fault state.
Yeah.
Right, which we have said, we've beat the drum over and over. That doesn't mean that no one is at fault. Right? There is still someone who was at fault in that claim. But you're right that even if you are not considered at fault, you still may be deemed a little bit at fault, and you still may be served a sizable lawsuit, right? What you'll find is that attorney will put something together that says, Roger, we know you're a good driver, but those tires on your car, they have 60,000 miles on them. And your brakes, those haven't been changed in 6 years. If you would have taken care of your car, I bet you could have avoided that drunk driver that ran through that red light if you were just paying better attention. And then they're going to take those injuries to that other party, their lost income, their pain and suffering, and they're going to say, you weren't 100% at fault, but you were 30% at fault. And that's valid in Michigan.
I'm going to tell you what, when we get done with this podcast, I don't know who gave you that information, but that was actually my car right now. Now you got me scared.
Yeah, as your insurance agents, I don't know that we want to hear that.
But they said I haven't had to do it, but now I'm a little worried that they're not. Maybe they're not paying attention, right?
Well, you asked what box do you check for that? That's the umbrella policy, right? The umbrella policy is going to say whether you're 10% liable or 100% liable in that accident, the umbrella policy is going to kick in and provide coverage for that lawsuit against you. So that's why it's so important. And actually, in the state of Michigan, if you hit a pedestrian, you're automatically going to be deemed at least 50% at fault. They could be in the middle of the road at night with no reflective gear on or any lights on. They could be, on drugs and alcohol and who knows what. They could be suicidal. If you hit them, you're going to be deemed at least 50% liable here in the state of Michigan. It's very, very interesting, but that's why you have to have an umbrella policy, because even if you're the best driver in the world, there's going to be times where you don't have a chance at avoiding that pedestrian.
Man. Now I'm driving 25 miles an hour wherever I go. I mean,
as your insurance agents, we like to hear that one.
A couple of things on umbrella policies. So this gets a little confusing for some folks. So one thing is the open and obvious defense, right? I mean, that's just not going to cut it. I mean, that was what overruled here in the state of Michigan.
Yeah.
So I mean, what does that mean?
Yeah, that's a great question. And we met with one of our clients who's a personal injury attorney just a few weeks back to kind of get the information and the down low from him. And what he said is what you need to understand is that the number of lawsuits being filed in Michigan is up dramatically since this court ruling. And what happened was in the past, you could use open and obvious as a valid defense for negating a lawsuit. So Roger comes over to my house. We're going to watch the Monday Night Football game. It's a big snowstorm. There's ice. There's snow all over the place. When you wipe out in my driveway, I could say as a valid defense, look, Roger drove over in a snowstorm. He knew it was going to be icy in my driveway. He can't possibly hold me liable for him falling and breaking his arm, right? And court said that's valid, right? That's open and obvious. You should know that there's a risk being taken there. Well, they threw that out. So no longer does open and obvious count as a valid defense, meaning there are going to be many more lawsuits in Michigan. Maybe not good for much, but it's going to be a lot of defense costs that insurance companies are helping pay.
And so if you happen to have a trampoline or a pool with a diving board or a slide, previously you could say, hey, so-and-so broke their neck diving off my diving board, but they knew they were diving into a pool that was 6 feet deep. It says right on the side of the pool, right? That can no longer be used as a defense in a lot of cases. Or that trampoline, everybody knows trampolines are dangerous, right? That also could not be used as a defense. So umbrella insurance is, number one, becoming more important than ever, but number two, it's becoming a little bit more expensive than ever.
So the Boers say no fun. So no fun things can be purchased anymore. So it brings up another question. How do you coordinate this umbrella coverage along with the auto liability, right? The homeowner's liability coverage. And we've heard so many things from other attorneys too. So we have a client that's worth $10 million. Well, go and get the $5 million that you can get without, I guess, having to go through a thorough underwriting or reinsurance or whatever that is, right? Sure. And that's all you're going to need. You're going to be okay. So, I mean, that's one of the confusing things for clients to just say, well, what do I do? Do I ramp up on the maximum liability on the home and on the auto, and then, hey, then even ramp up even more to, let's say, the highest I can get on the umbrella? How do you coordinate those coverages?
Yeah, that's a really tough question to answer because at the end of the day, how much liability coverage do you need? You need it to equal the largest lawsuit that's going to be filed against you during your lifetime.
And that's your net worth.
Hopefully that's zero, but it could be your net worth,
okay,
right? I mean, so hopefully we're never using this type of thing. But, the net worth idea and buying enough umbrella insurance to cover your entire net worth is what you're going to see if you just Google how much umbrella insurance do I need. How practical is that? Well, if you have $50 million, it's going to be really, really challenging to get $50 million of umbrella insurance, right? If you happen to wipe out a school bus with 30 kids on there, that insurance company is probably going to go belly up if they're paying $50 million for that significant lawsuit against you.
Right.
So when you're considering the cost of the insurance, number one, the underwriting challenges, number two, and the availability of it, number three, a lot of times it's saying, how much would I need to give that other party to have them go away? Take the insurance money and just be done with it, right? So let's say you're worth $10 million, but you have a $5 million umbrella policy. Well, when somebody sues you because there was an accident and you killed their spouse, they have to pick a dollar figure for that lawsuit, right? And a court's going to value things like the lost income. So you don't want to kill a doctor or an attorney or a business owner. They're going to look at things like the children growing up without a father or a mother, whichever spouse it was, and that's going to be, as odd as it is, there's going to be a financial reward for that or assigned to that. There's going to be pain and suffering if that person maybe had to go through some horrific surgeries or whatever before they passed away. But at the end of the day, the court is going to have to say the value of that person's life, the deceased person, is X number of dollars. Now, if you Google what's the average human life worth, you're going to see that it's more than $1 million, but it's unlikely to be $20 million, right?
Okay.
So at the end of the day, a court has to say this is what that lawsuit is worth, and you're hoping that your umbrella insurance is enough to cover that entire lawsuit against you. So once you get up into the $5, $6, $7, $10 million lawsuits, those are relatively unlikely and infrequent. So I think when you're deciding how much umbrella insurance to buy, you're talking what's the price? Can I get it? How hard is it to get? And how much am I really worried about that really, really significant lawsuit?
But do you still maximize the liability on the home and on the auto then?
Yeah.
Okay.
Yeah, we like to max that out and then add the umbrella on
What's
top
that
of it.
usually? $500,000?
$500,000, sometimes $1 million,
Okay.
depending on the insurance company.
Okay.
Yeah. And I think to kind of wrap up the umbrella piece there, the important part is that you've got enough coverage that the other party will settle for it.
Right.
If they sue you for $50 million, that's great because they're going to put a big pie in the sky number out there.
Right.
But if they settle for $3 million and you've got a $3, $4, or $5 million umbrella policy, you're good.
Right.
You're going home. Right. So the more money on the table via the umbrella, the more likely that other attorney and that other party is going to be willing to say, that's enough. Let's settle. Let's go home. Because it's very expensive and it takes a lot of time to pursue someone personally on top of the insurance coverage.
Right.
So you want to have enough coverage on the table that's going to incentivize that other party and their attorney to say, good enough, let's take the easy money via the insurance policy, and we'll call it a day.
Gosh, I'll tell you, that's good to know. I mean, this has been super, super helpful just on some of the basics on this coverage. So last thing, it kind of seems like it's out of left field. Coverage on your roof. It's not like it used to be. I've talked to clients about this in review meetings where, we had hail damage. They didn't necessarily get covered, or at least they had to fight to get the coverage for this damage to the roof. What's going on with roofing coverage and how has that changed?
It is a different environment today than it was 5 years ago. That is absolutely true. And what's happened over the past few years is roofing companies have learned that homeowners policies in general are going to have replacement cost coverage for a roof. So if there's hail damage or wind damage in an area, they're going to go and they're going to peruse the entire neighborhood and go door to door saying, hey, let me up there and inspect your roof, see if there's damage. And if there is, the homeowner will file a claim and that roofer's going to go to the next house in the neighborhood, et cetera, et cetera. You get this chain reaction. But the challenge is if somebody's got a 27 or 28 or 29-year-old roof that they should be replacing at that point anyway, they have a huge incentive to work with that roofing company to say, hey, my policy's got replacement costs. I can get a brand new roof, and I was going to have to pay, 10, 15, 20 grand to replace it sometime in the next year or two anyway. They're going to push really, really hard to get that roof replaced and covered by the insurance policy. And they're also going to have a little bit of incentive to steer the roofer in a certain direction to get that covered. So what insurance companies are doing today is they're providing actual cash value coverage for a roof, which means depreciated value. If your roof is 29 years old and they're 30-year shingles, there's really no value to it. If that roof is entirely destroyed, you're not getting a brand new roof. You only lost 1 year of life of that roof. So that claim payment's next to nothing. So that's what some insurance companies are doing.
Man, that's good to know.
Yeah. Another instance is they're going to apply a wind or hail deductible, right? So instead of having $1,000 or a $2,500 deductible like a lot of people do for burst plumbing or fire or vandalism, they're going to have a 1 or 2% of the coverage on the home if the claim is for wind or hail. So if you've got a $500,000 home and that's the coverage amount, if you have a 2% wind or hail deductible, that's $10,000. So if I have a roof that's only 10 years old and it's kind of damaged, but it's not really going to compromise the life, do I really want to file a claim and have to pay a pretty good portion of the replacement cost of it,
Right.
or just live with the fact that I had a little bit of damage and just ride out the lifespan of the roof. So I'm less incentivized as a homeowner to file that claim because now I've got a pretty significant out-of-pocket payment to get the roof replaced rather than having just a low deductible with a brand new roof put on the home by the insurance policy. So it's a big change.
Is that a component of the homeowners insurance that people will say, I'm not going to check that box and because it's not going to happen to me, and they try to save some money? Or is it, what do you do with that? How do you prepare for that? And is that something to say, hey, I want to make sure, is it my job to ask you, right, what this is going to mean? How am I going to be covered? Right? Because here we go again.
Yeah.
I've been in my house for 11 years. I'm
Yep.
doing the numbers in my head.
Yeah.
If I had to replace that roof, what you're saying is maybe I'm going to have to pay half of that,
Yeah,
right,
yeah.
through the depreciation.
Right. Yeah. A lot of times, you don't have a choice. It's the insurance company that's
They're
changing the
stipulated.
way
They're
that their
regulations.
policy
They're
works.
rules.
Correct. So they've all been going down the highway for the past forever, providing replacement cost coverage on roofs with a
Right.
normal, typical deductible. Well, now you've still got some on the highway that haven't exited yet, but in the next couple of years, they're going to be forced to exit. They're either getting off on the left side, which is the depreciated value coverage that Derek talked about,
Yeah.
where they're only going to pay for the remaining life of your roof, or they're getting off on the right side of the highway, which they're still going to provide replacement cost coverage, which is great, but they're going to charge a higher deductible for that.
Okay.
So it sounds scary, but most of the states in our country work like that. It's just new to Michigan. It's not favorable for homeowners, other than it's allowing the home insurance industry to stabilize itself. Right?
So
They had to do something.
Yeah, you better know. You're doing it yourself. You better know what the coverage is for that particular insurance company. Otherwise, you guys are going to have a pretty big surprise, right?
Right. And the do-it-yourself insurance is becoming really, really challenging because insurance companies don't want to provide coverage in a lot of those situations up front, right? Some of the biggest insurance companies in the country will now tell you if your roof is more than 10 years old, the only way we're going to provide a policy is if you pay for and obtain a full home inspection, send us the report, and give us 60 days to review it, and then get back to you on whether we want to provide coverage for you or not. Right? That's a really quick
That's
and dirty
tough.
way to say we have no interest in providing coverage in these type of situations. So the older, if your roof is getting old, it's getting more and more challenging to find a new home insurance policy.
Wow. I can't thank you two enough for coming in and shedding some light on some of these common insurance challenges and, and some of the mistakes that people make. And I really do strongly believe that this really illustrates why you've got to have somebody like your firm, like Boer Insurance, to say, hey, look, we got to be there. And when we're going to get you the coverage, hey, we're going to tell you what you need. We know what these companies are going to do. You guys have done that for me. You guys have come to me every single year and said, hey, you're covered here. We know what your net worth is. We know all these things about you. And you know what? We kind of shopped it. Maybe we can make some adjustments here to your coverage or deductibles to keep things reasonable, but still not compromise that coverage. And the fact that you guys do that is huge. And like you said, so many people will say, well, I bought this thing through an online insurance company.
Sure.
And I haven't looked at it in 7 years. Well, man, a lot of stuff's changed
Yeah.
in 7 years.
Yeah.
I mean, you could really be in big trouble.
You can. And the insurance industry, is probably in the toughest position it's been in the past 50 years.
Yeah.
Right. And so we would tell you it's more important than ever to work with an insurance agency that is ahead of the game and is doing some planning for you and knows what's going on. Right. Whether that's us or someone else, there's some great insurance agencies all over the place. But now it's just the most important time to work with somebody that can help set that up and make sure you know what you've got going on. You might not like some of the results, right? Nobody wants to see their roofing coverage deteriorate. They don't want to use higher deductibles, but it's important to know about that ahead of time,
Yeah.
right? You want to have the education, you want to have that foresight so that you can plan accordingly because guess what? It might impact your sinking fund.
Exactly.
It might impact your financial plan, right? Those things are all a piece of what you're doing for your clients of setting everything up to have the best long-term results. And you need to know what's going on in the nitty-gritty so that you can plan
Right.
accordingly for that.
Well, you heard it here, folks. All right. So cut back on spring break, less fun, more insurance, right? It's coming from the insurance twins right here from Boer Insurance. Again, want to thank you guys for participating in our podcast today. This is unbelievably helpful. We hope it'll help not only our clients, your clients, but people out there to understand, hey, these are little things that you kind of take for granted, but man, when something goes bad, it can really set you back financially. We also want to thank you for all the work you've done for our clients. We know, and this is probably one of the best things, when we bring somebody in to do a podcast or we partner with somebody at Ryan, Bell, and David, we want the highest level of service and integrity in that company and what they do. You guys have absolutely displayed that, right? I know people are going to go where they want to go and they have a relationship, but we've had personal experience, and not just from me. It comes from our clients too. Great talk and great information. Thank you.
And thanks for having us and for all the work that you've done with us as well. We really appreciate the relationship, and we look forward to doing this type of thing for decades to come.
Thanks so much for watching, for listening, and for learning more about home, auto, and umbrella insurance with us today. If you have any questions about your insurance, our financial services, or finances in general, please check out our website, reinveltdavid.com. Send us an email, give us a call, and of course, please like and subscribe to our podcast and stay tuned for our next episode.
This podcast is for entertainment and educational purposes only and is not intended as personal financial advice. Before making any financial decision, please do your own research and consult a financial advisor as needed.